Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalysts talk. Today we're looking at Ensysce Biosciences.
If you find our talks useful, please consider subscribe, like, and comment underneath. So getting right into it, we're looking at a pretty fascinating clinical stage biopharma company today.
Yeah, and it's one that's generating a lot of buzz right now. We're talking about a 7 out of 10 bullish score for a near-term swing trade.
Right, like a 1 to 3 month window. And we're going to give you the full picture here. The bull case, the bear case, and the granular science behind what they're actually building.
It is a really timely topic to explore with you, but to really grasp the potential here, we need to frame the broader context first.
Yeah, let's do that.
Because Ensysce Biosciences isn't just another biotech firm, just iterating on existing drug formulations. They are actively tackling one of the most complex societal and medical challenges out there.
The opioid crisis.
Exactly, the opioid crisis. But rather than approaching this through, say, policy changes or standard rehabilitation methods, they are utilizing a completely novel chemistry-based approach.
A molecular approach.
Right, to prevent abuse and overdose at the molecular level. It's a completely different paradigm.
Okay, let's unpack this, because the core technology is really what separates them from traditional pharmaceutical developers.
Absolutely.
We're looking at two main proprietary platforms that keep coming up. The first is T, which stands for trypsin-activated abuse protection.
Yep, T.
And the second is MPR, which is multi-pill abuse resistant. But to really understand why this matters, we probably need to look at what the industry was doing before this, right?
Oh, that historical context is essential. Traditionally, when pharma companies attempted to create tamper-proof or abuse-deterrent opioids, think back to those major reformulations around 2010.
Right, the big push for safer pills.
Yeah, they relied entirely on physical barriers. They essentially engineered a tougher pill matrix. The whole idea was just to make the medication incredibly difficult to crush into a fine powder.
Or they'd make it turn into like a viscous gel, right, if someone tried to dissolve it in water for an injection.
Exactly. But the glaring problem with physical barriers is that they are just that, they're physical.
And people eventually figure out a physical workaround.
Precisely. Abusers simply learned to adapt. They figured out that you could freeze the pills or bake them or put them in a microwave to break down that physical time-release matrix.
It's just brute forcing it.
Yeah, and once that physical barrier was compromised, the full dose of the opioid was available all at once. What Ensysce has done with the TUP and NPR platforms is shift the battlefield entirely.
They've moved away from the physical side.
They've moved from physical security to chemical security. The chemistry itself requires the drug to be processed by your specific digestive system to actually become active.
That is a fascinating pivot. It's almost like moving from a thick steel safe to a digital biometric lock.
I like that analogy.
Right. With the old tamper-resistant pills, it was just steel door. Eventually, with enough force or the right tools, someone breaks through. But this technology is a digital lock that only accepts one extremely specific physiological password.
Which in this case is the body's digestive enzymes.
Exactly.
That is an excellent way to conceptualize it. The medication is what we call a prodrug. In its pill form, it is completely biologically inactive.
It does nothing on its own.
Right. It relies on an enzyme called trypsin, which is primarily located in the small intestine. So if you bypass the gut, if you crush the pill and snort it, or if you dissolve it and inject it, it never encounters that trypsin.
Because it's skipping the stomach and intestine entirely.
Exactly. And because it hasn't interacted with that specific enzyme, the active opioid is never released into the bloodstream. It literally just passes through the system inertly.
I want to play devil's advocate here, though. If traditional tamper-proof pills failed, because determined abusers found a way around them, what is stopping a savvy chemist from just, buying synthetic trypsin online?
Right. The kitchen sink hack.
Yeah. You buy the enzyme, you drop the pill into a glass of water with it, let it unlock, and then drink or inject the active drug.
That is exactly the kind of critical question regulators and investors are asking. But the elegance of the TAPE platform is that it isn't just a simple binary reaction that can happen in a glass of water.
It's more complex than that.
Highly complex. The chemical cleavage required to activate the prodrug is entirely dependent on the dynamic environment of the human gastrointestinal tract.
So it needs the exact bodily conditions.
Right. It requires specific pH levels, temperature, and the in vivo kinetics of the gut to process efficiently and safely. Replicating that exact physiological environment in a makeshift lab setting is incredibly difficult.
It makes those conventional chemistry hacks highly ineffective.
Exactly. And then they have the MPAR technology, which adds another layer entirely. This one focuses specifically on overdose protection.
How does that interact with the gut enzymes?
MPAR is truly remarkable. It stands for multi-pill abuse resistant. Ensysce essentially pairs the tape prodrug with a microscopic amount of a trypsin inhibitor inside the exact same pill.
An inhibitor, okay.
So if you take 1 or 2 pills as prescribed, the massive amount of trypsin naturally present in your gut easily overwhelms that tiny bit of inhibitor. The drug releases normally to treat your pain.
But if someone takes 10 or 20 pills at once?
Then the math flips. You are now ingesting a significant cumulative dose of that trypsin inhibitor. It completely shuts down the trypsin enzymes in your small intestine.
Wow.
And without functioning trypsin, the remaining prodrug cannot be activated. The pills simply pass through your system without releasing the medication.
Effectively stopping an accidental or intentional overdose before it can even enter the bloodstream.
What's fascinating here is how this specific intellectual property acts as a substantial competitive moat. You have this highly defensible, incredibly complex mechanism, and Ensysce is actively expanding its patent protection globally.
They've had some recent wins there, right?
Huge wins. Recent developments from January 2026 highlight patent allowances in Brazil for both the TAP and MPR platforms, alongside a new allowance in the European Union for PF8026, which is another asset in their pipeline.
It's not just a lab experiment.
No, this isn't just a promising theoretical concept. It's a legally protected global framework.
That moat is critical for anyone looking at this as a swing trade. It shields them from traditional opioid manufacturers who are still relying on those outdated physical deterrents.
Absolutely.
And it positions them perfectly in front of the intense regulatory demands we are seeing today. Regulators want pain management solutions that don't continuously fuel the addiction crisis, and Ensysce is answering that call with legally protected chemistry.
It genuinely shifts the paradigm of pain management. However, as any seasoned biotech investor knows, brilliant science in the lab doesn't automatically pay the electric bill.
Or guarantee immediate shareholder returns.
Right. We have to look at how they are funding this operation.
Let's look at the financial reality, because this is where a lot of swing traders get really nervous. Looking at their recent numbers, Ensysce has basically no significant revenue.
None.
They are operating with negative profit margins and negative free cash flow. If you were just screening for top-line fundamentals, that profile is going to trigger some immediate red flags.
Sure. But if we connect this to the bigger picture, this specific financial profile is entirely typical and actually expected for a growth stage pre-revenue biotech company.
Because they aren't selling pills yet.
Exactly. They are not in the commercialization phase. They are deep in the clinical development phase. Their capital is being deliberately and aggressively reinvested into R&D.
Pushing things through the pipeline.
Specifically, they are funding their lead candidate, PF614, which is that oxycodone prodrug designed with the tape technology we just discussed. They are pushing that through pivotal phase 3 trials.
So you shouldn't expect standard financial metrics.
Right. They aren't paying dividends. They aren't doing stock buybacks. They are burning cash for one single purpose: to get these platforms across the FDA finish line.
The critical factor for our analysis, though, is how they are managing that cash burn. Looking at their recent updates, they are utilizing operational efficiency through non-dilutive funding.
Which is huge.
Specifically, they have secured major grants from NIDA, the National Institute on Drug Abuse.
That is a vital detail for you to factor into your thesis. Non-dilutive funding is essentially the holy grail for a pre-revenue biotech firm.
Because trials are so expensive.
Phase 3 clinical trials are notoriously expensive. We're talking tens of millions of dollars. Usually, to fund these trials, a microcap biotech has to issue millions of new shares to the open market.
Which ruthlessly dilutes the value of the stock for existing shareholders.
Exactly. It can completely crush a low-float setup.
So by securing government grants from an institution like NIDA, Ensysce gets the operational runway they need without immediately punishing their cap table.
Correct. And beyond the financial relief, a NATO grant is a profound institutional stamp of approval. The government isn't handing out these grants lightly.
They thoroughly vet the science.
It signals that the top scientific minds and health agencies fighting the opioid epidemic have vetted the underlying science of TAP and MPR and see genuine, actionable potential. It validates the technology while protecting the stock structure.
Here's where it gets really interesting. That fundamental validation brings us to how the broader market is currently digesting this stock, because the price action and volatility are the lifeblood of this 1 to 3 month swing trade setup.
It's all about the momentum.
Right. Ensysce has been popping up on several momentum radar lists. We are seeing them featured on lists like 12 healthcare stocks moving in Friday's pre-market session, and they frequently trigger alerts as an after-hours top mover.
And keep in mind, we are dealing with a low-float biotech stock here.
Meaning there is a restricted supply of shares available for public trading.
Exactly. When a catalyst hits, that low float acts like a powder keg, leading to highly elevated volume and rapid price action.
Yet, if you look at the quantitative sentiment scoring from recent market feeds, places like Chartmill and Benzinga, the overall sentiment scores a flat 0.
Classifying it as neutral.
Yeah, the algorithmic mood in those daily session reports is completely muted.
But that neutral mask is hiding a deeply bullish operational undercurrent. The algorithms might be missing the forest for the trees by only looking at the lack of immediate revenue.
And that neutral sentiment completely glosses over the major speculative catalyst that anchors this entire trade. On February 25, 2026, Ensysce officially announced they have launched a strategic review of alternatives.
We really need to decode what a strategic review of alternatives actually means in the context of a microcap pharma company.
It's not just a casual internal meeting.
Not at all. When a pre-revenue biotech makes this kind of formal announcement, it isn't just an internal audit. In Wall Street terms, it is essentially putting a massive forced sale sign on the front lawn.
They're opening the doors.
They are publicly signaling to the industry that they have taken the science as far as they can independently, and they are now actively looking to advance the platforms through major partnerships, global licensing agreements, or even a full acquisition.
An outright buyout. It's an open invitation to big pharma. They are basically saying, we have the proprietary technology, you have the massive distribution networks in the capital, let's make a deal.
And that kind of signaling fuels intense M&A rumors. Think about the massive pharmaceutical companies right now. They are suffering from severe institutional PTSD regarding opioids.
Billions in litigation.
Brutal public relations nightmares, heavy regulatory scrutiny. They are desperate to sanitize their pain management portfolios with abuse-resistant options. And Ensysce is sitting there holding the patent to a molecularly tamper-proof opioid.
The CEO has explicitly emphasized this strategic review as a targeted move to unlock shareholder value.
Furthermore, you have to factor in that Ensysce's platforms have received fast-track and breakthrough therapy designations from the FDA.
Those designations are critical.
They don't just compress the regulatory timeline, they provide more frequent access to FDA guidance. For a major pharma company that has the infrastructure to distribute a drug globally, but lacks the internal pipeline to develop an abuse deterrent profile from scratch.
It's a goldmine.
A fast-tracked, patent-protected platform is a highly coveted asset.
It's the perfect puzzle piece. A large player could acquire the technology, and suddenly they have a government-backed fast-track solution to the crisis that completely sidesteps the vulnerabilities of the old physical deterrent pills.
That M&A potential is why this 2026 strategic review is the primary catalyst driving that 7 out of 10 bullish score.
But an objective analysis requires us to examine why it is a 7 out of 10 and not a 10 out of 10.
Right, we can't ignore the risks.
As with any trade, especially in the volatile microcap biotech sector, we cannot just focus on the blue sky upside. We have to rigorously evaluate the downside risks.
So what does this all mean for the bear case? We need to look at the missing 3 points from that score to ensure you have a completely balanced view over this upcoming 1 to 3 month timeline.
What's the primary bear case here?
It centers entirely on clinical trial risks. Ensysce is currently running the PF614 Phase 3 trials. In the biotechnology industry, Phase 3 is the ultimate proving ground.
The graveyard of many biotechs.
Historically, success rates across the sector are dauntingly low. It is a strictly binary event. The company actively warns investors about these efficacy and safety uncertainties in their filings.
What specifically are the hurdles they need to clear in those Phase 3 endpoints?
They have to definitively prove 2 things. First, efficacy. Does PF614 provide equivalent, reliable pain relief compared to traditional, highly effective opioids like standard oxycodone?
Because if the prodrug mechanism makes the pain relief inconsistent, it fails.
Exactly. Second is safety. Does the abuse deterrent profile hold up perfectly in large-scale human trials without introducing any new, unexpected adverse side effects?
And if there are delays in patient enrollment,
Or if the data fails to show statistical significance on those endpoints, the stock will suffer a severe contraction. You are entirely at the mercy of the clinical data.
that is the harsh reality of clinical stage biotech. The science can be brilliant, but if the trial data misses the mark by even a fraction, the market is unforgiving.
Very unforgiving.
And there's a secondary risk here that is just as dangerous for a swing trader, which we might call market apathy.
This is a big one.
Despite the strategic review announcement in late February, and despite securing those IP milestones in Brazil and the EU earlier in the year, recent trading sessions showed elevated volume and volatility, but a very weak sustained price response.
The stock didn't gap up and hold new resistance level.
Right. That weak sustained response is a vital risk indicator.
It shows that the market is taking a very strict show-me approach. There is absolutely no guarantee that a transaction, a licensing partnership, or a buyout will actually materialize just because they announced a strategic review.
Because setting up data rooms, fielding bids, negotiating with big pharma, that takes months.
Exactly. And companies announce these reviews all the time, only to issue a press release 6 months later saying they've decided to remain independent because they didn't get an offer they liked.
It's the classic market dynamic, where the rumors buy the stock, but the news, or a prolonged lack of news, sells the stock.
If 3 months go by and we don't hear about a big pharma partner stepping up to the plate, that neutral algorithm sentiment we discussed earlier could quickly turn deeply negative.
As impatient traders just exit their positions and move on.
That is the core risk. The non-dilutive NIDA funding certainly helps cushion the operational blow by managing the cash burn, ensuring they don't have to dilute the stock just to keep the lights on.
But it will not prevent a major sell-off if the strategic review falls flat.
Or if the Phase 3 trials hit an unexpected safety wall.
Bringing this all together for the final verdict. Based on everything we've explored today, Ensysce Biosciences presents a solid 7 out of 10 bullish investment thesis for a near-term swing trade.
We are looking at a pre-revenue company operating in a sector that is absolutely desperate for innovation due to the ongoing fallout of the opioid crisis.
They possess a highly defensible, legally patented moat with their chemistry-based tape and MPR technologies.
And they are sitting right on the edge of a potential re-rating, driven by their ongoing strategic review of alternatives.
This raises an important question for you to consider as you evaluate your own risk tolerance.
While the low float momentum and the very real prospect of a near-term big pharma partnership offer significant outsized upside, are you prepared for the inherent volatility?
Because it remains a classic high-risk, high-reward biotech play.
The entire bullish thesis is heavily dependent on continued, flawless clinical success in those Phase 3 trials and the actual tangible materialization of M&A developments.
It requires keeping a very close eye on their upcoming press releases over the next few months. But before we wrap up today's talk, I want to leave you with a final provocative thought to mull over.
Okay.
We focus heavily on opioids today because that is the immediate glaring crisis, and it is the focus of their lead PF614 program. But the underlying research noted an incredibly profound detail.
Which is?
Ensysce's technology has universal application to other oral drugs.
Oh, wow.
Think about the implications of that for a second. If this trypsin-activated, digestion-required technology successfully proves itself with opioids, it doesn't have to stop there.
It could be applied to almost anything.
Could this eventually be mandated by global health regulators for all highly abused prescription medications?
Like ADHD medications.
Exactly. Think about Adderall or heavy sleep aids or anti-anxiety pills. If you can take any potentially dangerous pill and make it physically impossible to abuse via snorting or injection,
And chemically impossible to overdose on.
could this single platform eventually reshape the entire multi-billion-dollar pharmaceutical manufacturing industry? It's definitely something to think about as you watch how this strategic review unfolds. Thanks for joining us today.